The yen could put Japanese policymakers to the test again today as the currency closes in on 160 to the dollar right now, holding steady at 159.21 there. The Nikkei 225, meanwhile, higher this morning. Yen moves were subdued yesterday, but with Tokyo markets back from a holiday, traders are watching whether the yen can hold below 160, or if a break higher would prompt another response from authorities. Japan has several tools in its toolkit to support its currency. They can first step up verbal intervention or warn markets they are prepared to act if the yen falls sharply. Officials can also signal that higher rates are coming to help shape market expectations, or they can intervene directly in markets by buying yen and selling foreign currency, as Japan did in a historic coordination with the U.S. last month. But investors are looking for a more fundamental source of support: higher Japanese interest rates. They are now watching whether the Bank of Japan will speed up the pace of its tightening cycle. Market pricing now puts the odds of a September BOJ hike at 60.7%. That's up from about 40% at the end of July. Japan's business leaders are already warning that prolonged yen weakness is creating risks for the economy. The yen's weakness pushes up import costs for companies. The owner of clothing brand Uniqlo Fast Retailing said it expects to raise prices on some autumn and winter clothing in Japan by about 4% to offset the weaker yen, while Muji operator Ryohin Keikaku is looking to cut costs by increasing in-house production to protect its profit margins. And let's break down yen moves and its implications with Jesper Koll, expert director at Monex Group Tokyo. Thanks so much for your time, Jesper. Now, we spoke more than a month ago, and you said any intervention would be ineffective. So is that what we are seeing now with the yen weakness, or was the intervention really just a matter of buying time and slowing the pace of weakness for the yen and not so much reversing its course?
Look, I mean, intervention is always buying time. You're shocking markets, but to get markets to follow you, you would have to change policy fundamentals. And the reason the yen continues to be weakening now is because of simple finance. I can borrow at cheap interest rates in Japan, earn higher interest overseas. So the carry trade, basic finance, is reasserting itself and is forcing the yen weaker.
Yeah, but with the gains from the last currency boost now unwinding, what are the implications for potential future currency interventions? What does that mean for credibility?
Look, I mean, credibility clearly is on the line. The last intervention was really, a weaponization of the yen. And that's because both the Ministry of Finance here in Japan, as well as the US Treasury, spent taxpayers' money to actually buy the yen. So it's a very, very strong message, not business as usual. And, it's going to be very, very important over the next couple of days for the authorities to reassert that indeed they do mean business. If they do let the yen slip past 160, 161 without doing anything, then that would really open up a Pandora's box.
Yeah, what will happen then, Jesper? Because we're watching the 160 level now, kind of testing that. What happens if the yen crosses that line?
Look, I think that, again, the scenario number one, most likely you will get, certainly verbal intervention here from Japan, but if you don't actually put money to work, then basically markets are going to test the result of both the US Treasury and the Bank of Japan and Ministry of Finance.
Yeah, and, a lot of people have said, too, that it really goes back to fundamentals, to the rate differentials between Japan and the U.S. So do you think that this now puts even more pressure on Japan, on the BOJ, to hike rates quickly? And will we see bigger rate hikes now?
Look, I mean, the Bank of Japan has literally maneuvered itself into a box, into a corner. The next policy board meeting is in September. If they don't hike in September, you could easily the yen going back towards 165, 170 in a hurry. And the communication from the Bank of Japan leads a lot to be desired. There's worries in the market that the Bank of Japan cannot afford to increase interest rates because there's some weakness in the Japanese secondary banking system. On top of that, of course, the concern of a rising interest expense for the Treasury. So if you are a speculator, it really is game on right now. You earn the carry as you invest in higher yielding overseas assets. And if it goes wrong, the Treasury provides you with liquidity to get out. So it's almost a win-win for speculators.
Yeah, interesting point there, Jesper. And the last time you were here, you said you see the yen going to 200. Where do you see it now?
Look, I think for all intents and purposes, the U.S. economy continues to be strong. I think that, the probability of the Federal Reserve actually increasing interest rates rather than cutting rate is certainly, high. And I think for all intents and purposes, the Bank of Japan is going to continue to drag its heels. So on my book, I think the yen continues to weaken.
How far can it go, Jesper?
Oh, it can easily. It depends on the U.S. Economic strengths. The labor market was a little weak over the last couple of months. If that reasserts itself, the U.S. labor market, generates 150, 200,000 jobs. I think dollar yen could easily go to 180, 185 before the end of this year.
All right. And Jesper, before I let you go, a lot of this, of course, hinges on the expansionary fiscal policy that we are seeing in Japan. How do the currency moves and the market signal? What will that mean for fiscal policy? What impact will that have?
No, you make a very, very important point. And Prime Minister Takaichi has presented a very bold domestic industrial reorganization policy, lots of tax dollars to be spent and lots of public-private partnerships to actually be invested here in Japan. The problem is that nobody believes that she can pull it off. As a result of that, Japanese investors prefer to put their assets to work overseas rather than here in Japan. Come October, November, Prime Minister Takaichi has to show concrete projects that earn a high return. That would be very important to actually keep domestic assets here in Japan.
Jesper, really appreciate your insights today. We'll watch those yen levels closely. Jesper Koll there, expert director at Monex Group, Tokyo.